All right, so good afternoon to everyone and welcome to the monthly Eurosif Sustainable Finance Update. So as always, we'd like to thank everyone for taking the time to attend these sessions. There's quite a few notable developments in the realm of sustainable finance to share with you today, as always. So I'm sure, like us, you've been finding this period quite hectic, and so we'll try to be as efficient today as possible. That is why we're going to launch immediately into the update and try and maybe even offer you some of your time back after the end of the session. But with all that said, I think we can take a quick look at our agenda for this afternoon. So Marie, thank you. So today we're going to provide you with an update on first the state of play of the Corporate Sustainability Reporting Directive, or the CSRD, and how it's progressing through the legislative process. Then, closely related to the CSRD, we will provide you with an update on the EFRAG consultation on their exposure drafts for the European Sustainability Reporting Standards, or the ESRS, that will be adopted pursuant to CSRD. That will be followed by an update on the progress of the proposal for an EU Green Bond Standard. And then the final item on our agenda will be an update on the European Commission consultation on ESG ratings. Some of you may recall that we briefly mentioned it during our last Sustainable Finance update in April. But we have a bit more to share in terms of the context of the consultation during today's session. So throughout the updates, as always, we welcome any questions that you might have. There should also be time at the end for a Q&A. So if we need to proceed with the updates and leave your question unanswered, we can revert back to you at the end of the session. Finally, of course, the slides will be made available on our website after the session is over today. And you can always watch or listen back to the update on our YouTube channel, or indeed share it with colleagues. So throughout this session, you may be hearing me also give prompts to my colleague Marie just to change some of the slides. And with that, I will say, Marie, could we please change the slide? So diving into our first agenda item, an update on the state of play of the CSRD. As many of you are well aware, particularly if you followed our regular updates, the CSRD has been progressing through the legislative process. Earlier this year, as we covered off, the European Parliament and the Council adopted their respective positions on the Commission's initial proposal. They have now entered interinstitutional negotiations, or trilogues, in order to decide the final content and provisions of the directive. Now, finalizing the CSRD legislative proposal, or legislative process rather, is a priority of the French presidency of the Council. And thus the progress has been moving forward quite quickly. And there is a limited number of so-called political trilogues that have been scheduled. A total of only 3 at this juncture. So thus far, there have already been 2 political trilogues. The first occurred on the 28th of March and the second on the 25th of April. The third and final political trilogue is scheduled for the 18th of May, with a desire for a full political agreement between the co-legislators on the final legal text of CSRD to be reached by that point. Now, in terms of the process, just to ensure everyone understands correctly, political trilogues, as they're referred to, are set aside to reconcile fundamental differences between the Parliament and the Council and resolve the most contentious or politically sensitive issues between the two co-legislators. So in addition to these political trilogues, which are sort of the headline event, if you like, there have also been several technical trilogues, which take place at a technical level, kind of prepare the ground for the political trilogues, and they address the less sensitive issues. So it is not as if there's only been 3 meetings between Council and Parliament to determine the outcome of the CSRD legislative process. There's been a lot of work going on at technical level. So with process sort of attended to, Marie, could we move to the next slide? So we understand, from the outcome of the 2 political trilogues that have already taken place, that the most politically sensitive issues to have emerged during the process so far are the following. So number 1, the scope of the CSRD and whether it should apply to non-EU companies, or rather a broader range of non-EU companies than was envisaged in the Commission's initial proposal. 2, whether a list of high-risk economic sectors and activities should be identified. And then 3, whether there should be additional requirements applied to the provision of independent assurance of sustainability reporting. So as is very often the case, it is the European Parliament insisting on the more ambitious scope of application of CSRD. The Parliament would like European sustainability reporting standards to apply to non-EU companies that sell products and services into the EU. So they may not be established in the EU, they may not have a subsidiary in the EU, or they may not have financial instruments listed on EU regulated markets. But if they sell products or services into the EU, according to the European Parliament, they should be subject to European sustainability reporting standards. So of course, this goes significantly beyond what the Commission proposed initially. Furthermore, the Parliament would also like the Commission to adopt a delegated act pursuant to the CSRD, explicitly identifying so-called high-risk economic sectors and activities, for which there would then subsequently be sector-specific sustainability reporting requirements. So just to give you an example, these high-risk sectors might include the textile sector or the mining sector, sectors that have a more dramatic impact or more significant risks in terms of environmental or social factors than others. Finally, the Parliament has also sought to restrict audit firms that are responsible for financial auditing from also carrying out the assurance of sustainability reporting for the same company. So these are effectively, the issues that are, under discussion during the political trilogues. The Council and also while, sort of in principle, it's neutral, the European Commission are opposed to the Parliament's position on these issues. The Commission has advised the co-legislators against extending the scope of CSRD to encompass a wider range of non-EU companies, given that this would imply legal, enforcement, and also practical complications. So, for example, when it comes to restricting audit firms responsible for financial reporting from also verifying sustainability reporting, the Council and the Commission also believe that this would impose an unjustifiable restriction on audit and external assurance markets. So this is sort of the main contours of the debate. And actually, Marie, we can move to the next slide. Apologies. So this is, these are the kind of contours of the debate. These are the main issues on which the co-legislators diverge. One important regard in which they are fully aligned is in terms of the content of the sustainability reporting. So both Parliament and Council largely agree on what it is that companies should have to report. So whether that be transition plans, whether that be on various different environmental or social impacts, they agree on the content, on the substance, if you like. It's just on scope, external assurance, and whether a list of high-risk economic sectors and activities need to be explicitly identified that they diverge. So that is, broadly the state of play when it comes to CSRD. Again, the third and final political trilogue to resolve the issues that we've just gone through is scheduled for the 18th of May. And then, assuming the co-legislators agree on the final text of the CSRD, it will then be voted on by both institutions, possibly in June if the sort of schedule of the French presidency is ultimately realistic, or possibly July. But in any event, probably before summer, CSRD will have been voted on and can enter into force. So with that update provided, I would welcome any questions. And I see, in fact, that we have already received a question on whether it is, in fact, the case that the Parliament envisages provisions in CSRD that would restrict audit firms from also carrying out the verification process. So that is indeed the case, and this is in fact a provision that the rapporteur Pascal Durand is very adamant to be included in CSRD, and the feeling is that there may be conflicts of interest, at least according to the rapporteur, in case an audit firm doing the financial reporting is then also asked to do the sustainability reporting. Now, what I can clarify is that at this point, even in the Parliament's negotiating team, Durand, the rapporteur, is a bit isolated. Most members of the negotiating team on the Parliament side don't actually share his view. And then the Council and the Commission are also ranged against it. So I don't want to sort of speculate necessarily, but I suspect that the Parliament will probably have to concede on this point. So then we have also a second question here, which just give me a moment to read. So in terms of the scope of CSRD, the original Commission proposal, of course, envisaged non-EU companies with financial instruments listed on EU regulated markets being in scope. My understanding is that the term financial instruments is broader than just equity. You know, it does not refer simply to equity or to shares or stock. It also includes, say, bonds or other financial instruments. So, you know, that I hope answers the second question. So at this point, there doesn't appear to be any other questions, in which case I can pass you to my colleague, Federica, for an update on the EFRAG consultation. So with that, Federica, please go ahead.
Thank you, Hugo, and good afternoon to everybody. So indeed, on the 30th of April, the EFRAG launched a public consultation on the exposure drafts of the EU sustainability reporting standards. So the consultation period would last 100 days, so with the deadline set on the 8th of August of this year. So before we move on into the details, why this initiative is fundamental for investors. We already touched it many times in previous episodes, but it's worth underlining again, because EU companies will report information on sustainability matters using those standards, of course, according to the CSRD requirements. So these initiatives and this work has a great potential to increase the availability, the quality, and the comparability of ESG data available to investors. So it is crucial that investors and in general financial market players participate in this consultation to make their voice heard about which information they need, how this information should be delivered, and so on. So what happened and what is happening in the EFRAG? This is just to provide you with a little bit of background about who's doing what, why, and by when. So the drafts that you will be able to access from the EFRAG websites were prepared by an ad hoc project task force that started working on the standards a long time ago in June 2021. Indeed, in the cover note of the consultation, you can read that it is clarified that drafts are published under the sole responsibility of this task force. And as already seen together in previous edition of this monthly update, in the last months, the EFRAG has conducted a governance reform with the objective to establish a sustainability pillar. So in particular, two new bodies were established, the Sustainability Reporting Board and the Sustainability Reporting Technical Expert Group, or TAG. So now the project task force will hand over the project to those bodies that will kind of finalize the standards. So the board and the TAG, as said, will consider the drafts in parallel with the public consultation. And together with the inputs and the results from the public consultation, the board, supported by its technical expert group, will agree on the first set of draft standards, which in turn will be submitted to the European Commission as technical advice. So, meanwhile, there are other processes ongoing. So by May, or at least these are the expectations, the project task force will finalize the basis for conclusion. So we will see these other documents published in the next few weeks. The basis for conclusions are not part of the standards. The objective is to clarify the reasoning followed by the EFRAG and its task forces in drafting the disclosure requirements. So these are important to provide more background and improve the understanding of why certain disclosure regulations are included and why and how they are shaped. The EFRAG will also conduct a cost-benefit analysis that will be included in the technical advice that will be delivered to the European Commission. And in the next few weeks, we will have outreach events aiming to kind of explain the structure and the objective of the standard and the consultation. So what's next? The EFRAG is expected to deliver the first set of standards to the European Commission by November this year as a technical advice. Then the European Commission will consider the IFRAC's technical advice, consult with other entities as determined in the text of the CSRD, and then adopt a delegated act that will enshrine the standards in the EU regulatory framework. The objective of the European Commission is to adopt the delegated act by the first half of 2023. And the entry into force is expected as of 2024. But as we've seen with Hugo, the CSRD is pending. So there are some contents that should be finalized. So if we can move on to the next slides. So how these draft standards look like? Let's have a quick look. In terms of the architecture of the reporting standards, we have cross-cutting standards that cover areas that are relevant across the whole spectrum of the ESG topics, and topical standards covering specific topics. And these topical standards are sector agnostic, means that apply to all companies irrespective of their sector. And there will be also sector-specific standards, which have not been drafted yet, so are not included in the current consultation. So in terms of cross-cutting standards, these are divided into two parts or two standards, or you will see two documents on the website. One with the general principles, for example, how to apply the CSRD principles, how to prepare the reports. And when I say how to apply the CSRD principles, some of them are, for example, the double materiality approach, the time horizon, or the inclusion of the value chain, etc. And there is one cross-cutting standard that cover the sustainability, other sustainability topic from a general perspective. And in general terms, you will find there disclosure requirements about how the sustainability is embedded in the company-wide strategy, business model, governance, and materiality assessment. For example, there you will find disclosure requirements on how the company identifies its risks, opportunities, and impacts. So the topical standards include three areas: environmental standards, and there we have, for example, the climate change topical standard and other 4 environmental standards. Then we have 4 social standards. For example, one topic covered is workers in the value chain. And then we have 3 standards covering governance matters, like, for example, the business conduct. In each topical standard, you will find disclosure requirements covering topics such as policies, targets, action plan, resources, and performance measurement. So if we have a look on the right side of the slide, each standard, so each document that you will see uploaded on the website has at least 2 parts: a list of disclosure requirements and application guidance. Both are mandatory and will be part of the EU Commission Delegated Act. Finally, a tip on documents that might be interesting for you, and that you can find them in the appendix of the cover notes. First one is a table with the list of the SFDR principal adverse impact indicators and the corresponding disclosure requirements in the IFRAC draft standards. These are really important, and also investors are expected to kind of send feedback to the IFRAC as to whether this correspondence is adequate and clear. Then we have 2 tentative reconciliation tables between the IFRAC and respectively the TCFD and the ISSB, which are 2 other reporting frameworks, which are more focused on climate. So will help investors to navigate different reporting frameworks with different structure and also different objectives. So if we can move on to the next slide, we will briefly go through the structure of the consultation so you can see what you can expect if you decide to respond or to participate or at least having a look. So the current public consultation aims at receiving feedback on 3 key aspects of the exposure drafts, and the documents are organized into 8 questionnaires. So the 3 key aspects are the overall substance of the exposure drafts, the possible options for prioritizing or phasing in the implementation of standards, and the third aspect is the adequacy of each disclosure requirements. So in terms of overall substance of the exposure drafts, you will find questions on the relevance of the proposed architecture, on the implementation of the CSRD principles, and the overall content of the draft. In terms of possible prioritizing or phasing in, there are proposals in terms of delayed implementation on comparative information and entity-specific disclosure. And in terms of adequacy of each disclosure requirement, you will find specific question for each disclosure requirement across all the cross-cutting standards, the environmental, the social, and the governance standards. So of course, will be available to kind of provide more information and more substance on the other parts of the consultation, but at this juncture, I think that we can move on and touch the next topics. So I will revert back to Hugo. Sorry, we had technical issues with the microphone. I'm sorry. So before moving on the next part, I see that there are some questions. So are we sorry, I'm reading. Are we expecting financial services specific standard in the future as part of the sector specific standards? Yes, there will be, or at least what we expect is that there will be also sector specific standards for financial institutions. And what about non-listed companies? This is a question that entails the scope of the CSRD, so it's a pending, as we have seen with Hugo. So what will these standards mean for already existing ones such as GRI and SASB? Thank you for this question. This is very important, and we must underline that the IFRAG is effectively collaborating with all these international organizations. So with some of them have also established kind of solid and established collaborations, with the objective to clarify and of course collaborate to seek convergence and alignment, but also to collaborate and with the objective to provide investors with tools to navigate different structures. So each one of them have decided their own objective and their own structure, but they will make as easy as possible for investors and companies to use both of them. That said, of course, in the European Union, the CSRD and the IFRAC standard will be enshrined into law, so they will constitute regulatory requirements. I hope that I answered the question. I see that there is another one, so I pick this final question, and then I will pass to Hugo. So how these standards related to RTS under SFDR? Well, basically, first of all, as we have said, the IFRAC standards will provide companies provide companies and also investors disclosure requirements in order to make available for investors information that will allow investors to comply with the requirements of the SFDR and the regulatory technical standards. So this is the first part. And the second part, I think, of the question, if we take into consideration financial institutions at entity level, so entities or companies, undertakings that will be required to report under the CSRD, as said, there will be also sector-specific disclosure requirements that for sure will strike for alignment with also some of the requirements of the SFDR. I hope that I answered the questions. Now I think that I can hand over to my colleague Hugo for the next topics. Thank you.
So many thanks, Federica. So with that, we can turn to our third agenda item, which is an update on the progress of the proposal for an EU Green Bond Standard, or the EU GBS, and see how it's or what stage in the legislative process it's at. So as many of you recall, the European Commission adopted a legislative proposal for an EU Green Bond Standard in July of 2021. Now, broadly speaking, in order to be eligible for the European Green Bond label, the proceeds of the bond, according to the initial Commission proposal, must be invested entirely in taxonomy-aligned economic activities. So since the Commission has tabled its proposal, the European Parliament and the Council have been determining their respective positions and drafting amendments to the proposal. Now, on the 8th of April, so just about a month ago, the Council adopted its general approach, meaning it is now ready to enter trilogues with the European Parliament. On the Parliament side, the Econ Committee was initially scheduled to vote on the final Parliament position at the end of April, but the vote has been postponed as the debate in Parliament is continuing for longer than anticipated. And the reason for the prolongation of the debate in Parliament is, of course, the adoption of the complementary delegated act, including natural gas and nuclear energy in the EU taxonomy. And effectively, the view in the Econ Committee is that if certain green bond proceeds could be invested in taxonomy-aligned gas and nuclear, this may mean there's a need for additional disclosure or transparency requirements around the use of bond proceeds to finance natural gas or nuclear energy projects. So that is just a little bit of context, which we can clarify a little bit later in this update. But moving on to the next slide, please, Marie. So in terms of the substance, the Council General approach that was adopted at the beginning of April only envisages a few amendments to the Commission proposal. So the most significant Council amendment is to Article 6, in which the Member States make provision for a so-called flexibility pocket, which will allow up to 20% of EU green bond proceeds to be allocated to activities that are not covered by the taxonomy. So neither taxonomy eligible nor taxonomy aligned. And the rationale behind this, this amendment is, of course, that the scope of the taxonomy is by design quite narrow. And the feeling among the member states is that by investing in activities that are not covered by the taxonomy, there is, of course, still the possibility to have a positive impact to maybe finance research and development, etc., that may ultimately find solutions to some of the environmental challenges that we're facing. So the feeling simply was that more flexibility is needed because, restricting, allocation of all bond proceeds to taxonomy aligned activities was seen just as a little bit unrealistic. So, of course, the Council in their general approach have also acknowledged the need for additional disclosures in cases where bond proceeds are allocated to non-taxonomy aligned or eligible activities. In other words, bond proceeds that avail of this flexibility pocket. Another important element of the Council position is the provision in Article 11 for sovereign issuers to be subject to an external review of their pre- and post-issuance documentation. So this, during the early stages of discussions in the Council, was quite contentious among the member states. Typically, they don't like sovereign issuers to be subject to external independent validation, verification, review, whatever you want to call it. And they prefer to, rely upon other public institutions, state auditors or supervisors to perform that role. So it is, in a sense, Article 11 being left in the end unamended by the Council is quite significant. Now, having said that, there is a recital that does envisage a scenario whereby the external review to which sovereign issuers will be subject will be more lenient, say, than the external review process for corporates. So that is just interesting to note. But moving on to the next slide, please. So in the case of the European Parliament, as mentioned, it is yet to finalize its position. Now, as always, the European Parliament envisages more amendments to the Commission proposal than the Council. Now, perhaps most significantly, the Parliament has also made provision for a flexibility pocket. And similar to the Council, they foresee or propose a flexibility pocket that would allow 20% of bond proceeds to be allocated to non-taxonomy eligible or aligned activities. So accordingly, when trilogues begin, this is unlikely to arise as a contentious issue. And so, we can be more or less certain already at this point that the Green Bond Standard will allow for some flexibility when it comes to allocation of proceeds. So that is already something we can say with a reasonable degree of confidence. Otherwise, and this is the reason it's taking longer to finalize the Parliament position, in a more radical departure from the Commission proposal, the Parliament is also contemplating the introduction of an additional category or a subcategory of EU green bond, if you like, and that would be the so-called EU transition bond. And the reason for creating this subcategory or proposing it is that the transition bond would specifically finance activities that qualify as transitional under the EU taxonomy. So, of course, as many of you are very, very aware, the taxonomy has sort of three categories of activity. There's taxonomy aligned activities that are transitional activities, which are activities for which there's no economically or technologically feasible alternative. And then there's enabling activities. Importantly, the complementary delegated act that was adopted earlier this year that will include natural gas and nuclear energy in the EU taxonomy will include them as transitional activities. And so in Parliament, there has been debate over whether to create this subcategory of green bond that would be linked to transitional activities in the taxonomy, and accordingly would cover bonds that would be likely to invest in natural gas and nuclear energy. And so in those cases as well, the transition bond would have additional transparency requirements, according to which when there is investment or when proceeds are allocated to gas or nuclear, that fact is made abundantly clear to investors. So in a way, you could perceive this proposal from the Parliament for an EU transition bond as a way to respond to gas and nuclear being included in the taxonomy. Now, at present, one of the difficulties for providing for disclosures or more transparency around proceeds going to gas or nuclear is, of course, the fact that the Complementary Delegated Act has not yet entered into force. And theoretically, at least, it could still be rejected by the co-legislators. And while that is theoretically the case, it is quite unlikely. Still, it's difficult for Parliament to justify envisaging disclosures which may not be necessary, say if the Complementary Delegated Act were to be rejected. So that is more or less kind of an update on the state of play of the EU Green Bond Standard proposal. We're going to be monitoring the developments monitoring the progress of the file. But I suppose with that having been, ticked off the list, I'd be happy for any questions related to the Green Bond Standard. And if not, as appears to be the case, I can pass you back to Federica for a quick update on the Commission consultation on ESG ratings. So Federica, please go ahead.
Thank you, Hugo. And I see the time is running out. So on the left side of the slides, you will see we prepared for you some insights on the contents of the EU Commission consultation relating to ESG ratings. So you will be able to see some of the topics that are covered in terms of use of ESG ratings, functioning of the ESG ratings market, and the opportunity and the characteristics of EU regulatory interventions. what we would like to share with you this afternoon are some information about next steps. So from our understanding, the Commission has the objective to introduce a standalone regulation on ESG ratings, focusing especially on transparency. So this is the transparency on methodology. This is the objective. The Commission is expected to propose and present a legislative proposal by in the first month of next year, probably Q1 2023. So as already said, the deadline of this consultation is the 6th of June. So there is still 1 month to respond. And it will be for sure a major regulatory intervention. So I see that our time is over. Maybe there will be sorry for getting back to the previous topic, but there was a question on the ISSB very quickly. First of all, in terms of organization, towards the end of April, the ISSB has established some working groups to enhance compatibility between its global baseline and jurisdictional activities, and the IFRAG is part of these working groups. More in technical and practical terms, if you go to the cover note, in the final page, you will find in the appendix a tentative reconciliation table between the IFRAG standard and the ISSB standard. So it will be possible to kind of try to navigate the two different structures. So this was very quickly, and hope I covered the question. I see that there is a question on the EU Green Bond standard, so I might revert back to Hugo if we have some final seconds.
Sure. Thank you very much, Federica. So indeed, I'll be very quick, and I may not be able to cover all questions. Someone has asked that in relation to EU transition bonds, if they're introduced, would the flexibility pocket remain? I think the assumption is, I would need to check the provisions again. I think the assumption is that yes, the flexibility pocket would remain. Now, one of the reasons I haven't checked the provisions on transition bonds too closely is that the proposal in Econ has come from the rapporteur, Paul Tang, and it's not a popular proposal. So at this stage, it's very unclear as to whether Parliament will actually adopt or have their position, reflecting this new subcategory of a transition bond. And even if indeed the Parliament's final position does reflect this subcategory, it's likely to be unpopular with the Commission and the Council. Given just the nature of transitional activities and the fact that they're updated quite dynamically, it would be quite difficult to operationalize and to sort of have a functioning EU transition bond standard. So for that reason, I think it's not the most feasible of proposals. In theory, it might to some people sound kind of workable, but it's likely to encounter quite a lot of opposition. The next question I'll cover, and I'm afraid it'll have to be our last one for today, is, someone is asking that there's a bit of confusion between transitional activities and an extended taxonomy, and whether nuclear and gas would belong to an extended taxonomy or an environmental taxonomy. As things currently stand, and this is something we clarified in some of our previous sessions, gas and nuclear, if the complementary delegated act is adopted, will belong to the environmental taxonomy, to the green taxonomy as transitional activities. They will not belong to an extended taxonomy, what some people refer to as an amber or intermediate performance taxonomy. Another very important thing to note is it's highly unlikely that there will be an extended taxonomy. So it is an idea that's been floated by the Platform on Sustainable Finance. That does not represent the view of the European Commission, and the conversations we've had with the Commission, or the signals we've received, are that there is no real appetite to have an extended taxonomy framework. The feeling is it would make it far more complicated, and the feeling is that the existing taxonomy is already a bit cumbersome already. So hopefully that answers that question. With that, I'm afraid we will have to wrap up today's session. But as always, thank you very much for taking the time. If we haven't been able to respond to one of your questions, please don't hesitate to reach out to either myself or Federica. We can easily be reached at our Eurosif email addresses. But with that, I will wish everyone a very good remainder of the afternoon and all the best. We hope to see you at our next session at the start of June. But thank you all, and bye-bye.
Bye.